Good morning, everyone. I can see people are starting to log in. That's great. We'll give you a couple of minutes to log in. Of course, let us know if you have any issues with seeing us. You should be able to see us on the webcam. If you can't see the slides, let us know. Okay. All right, I think most of you have logged in now, so we'll get started. Today, as many of you would know, is a special day for Australia. It's actually National Apology Day. So Legal Aid Queensland would just like to acknowledge and respect the Turrbal and Yagara people as the First Nations custodians of the land where our office stands, and where we work to help disadvantaged Queenslanders uphold their legal rights in our justice system. Okay, so before we get into the presentation and I introduce you to our wonderful presenters here today, I just have to mention our disclaimer slide. So this webinar is for community legal education purposes only. All right, so my name's Ellen Limerick and I'm the Community Legal Education Officer at Legal Aid Queensland. And you may know these lovely people already. We've got Paul Holmes, Senior Lawyer, Civil Justice Services, our Consumer Advocate here at Legal Aid. And we have the lovely Loretta Kreet, who's also a Senior Lawyer in the Civil Justice Services section. And they're going to talk to you today about buy now, pay later and other loan schemes. But before we do that, I'm just going to go through some go-to webinar housekeeping in case you're new to our webinar program. So this webinar is being recorded. So you don't have to worry if you missed something today, you can re-watch this webinar on the Legal Aid Queensland YouTube channel. So we'll endeavour to put that up there very quickly, so in the next week or so. If you need any technical help with GoToWebinar, there's the phone number on the screen to call, or you can email webinars@legalaid.qld.gov.au. So we also have some information for community workers and carers on our Legal Aid Queensland website under the information for community workers and carers page. So you'll also see on the right-hand side of your screen will be a drop-down bar. Now you can ask questions throughout the webinar using that, and you can also chat to us. So feel free to pop in a question. If you have a burning question, we can answer it on the spot, or we might answer it as we go. We'll also leave 20 minutes at the end of the webinar to go through your questions. So there's also a, in the drop down bar, there is a handout section where we've uploaded the PowerPoint slides for today. So feel free to download the PowerPoint slides and print them out so you can write your notes as we go. Okay.
Can we just check, can everybody hear us? We know there's somebody with a sound problem.
Yeah, so let us know, type in a question if you can't hear us. The sound appears to be working on our end.
Excellent, thank you.
Okay, thank you, great. Okay, so we'll start this webinar off with some polls. So we're just interested in knowing what area do you work in? We know that we saw some registrants from Western Australia and some other states, so that's very exciting to have people from all over Australia joining into a Legal Aid webinar. So I'll give you a couple of seconds to answer the poll. And thank you to all those who've let us know you can hear us, that's great. Okay, I'm just going to close off that poll now, so make sure you get your vote in. Okay. So I'll share the results with you on the screen now. So 35% of you are from Southeast Queensland. We've got a large amount in Far North Queensland and Regional Queensland too, with 13% and 24%. And then 28% of you are in another state. So welcome everyone. That's great. Okay. So we're also interested in knowing, since the topic of this webinar is buy now, pay later providers, we want to know how often do you help clients who have a problem with one of these services? Is it quite a lot? Is it just sometimes, hardly ever, or have you not dealt with it yet in your role? Okay, I'll give you a couple of seconds to answer the poll and then I'll share the responses. Okay, I'm going to close off that poll now. Thanks to everyone who voted. Okay, so we can see buy now, pay later services are becoming a more frequent issue for you all, with 38% of you saying you frequently deal with these providers, 42% say sometimes, 13% hardly ever, and 7% never.
Lucky.
Yeah, lucky. Well, you're at the right webinar. Okay. Right, so here's the outline of what we're going to talk about today. I might hand you over to Paul now to go through that.
Sure. Just before we begin, I just want to acknowledge the contribution of Mary McLean to this webinar. She was going to join us for it, but unfortunately has been unable to make it, and just wanted to acknowledge that contribution she's had in preparing it. So let's talk about buy now, pay later. What we're going to do today is just cover, for those of you who might not have had a lot to do with it, what exactly are we talking about? Then we're going to look at, is it covered like other credit products by the National Credit Law? What legal rights clients you help actually have when they encounter a problem with these products? Practically, what effect are these products having? All right, so for that small percentage of you who are yet to deal with this product, what are we talking about? Essentially what we're talking about, aren't we, Loretta, is you can buy a product or service
and you don't have to pay for it.
Straight away.
Well, sometimes you don't have to pay for it ever, or you can't afford to pay for it.
Yeah, so you're buying something by installment.
Yeah, that's right. It's very similar, I think, to the lay-by services that some people may know about.
Now, what's the key difference between lay-bys though?
Well, you get to take the product away. So in a sense, you don't lose the right to have the product in your hands.
Whereas lay-bys, you had to pay for all of the instalments before you could take it away.
But that also meant that if you couldn't pay, you didn't end up with the debt. You just didn't get the product.
Yeah. So, and we're seeing, and the thing that it's marketed as is, it's marketed as we don't charge you interest.
Yes, it doesn't cost you anything. So it's a way to have things now. If you can't afford to buy them now.
Yeah, and I was telling Loretta just before we started this webinar, somebody was telling me the other day that they believe you can buy now, pay later for your coffee.
Yeah, well, not in Queensland.
Not in Queensland, but apparently down south.
Coffee must be very expensive.
So, but more seriously, we're also seeing it in major shopping centres when you go to pay, rather than the option coming up, do you want to pay using your credit card or your debit card? One of the first options that come up, do you want to buy now, pay later this? Which to me is a bit of a worry.
It is a real worry for our clients. I mean, we can all have a little bit of a laugh about it, but at the end of the day, this is very serious for the clients and I think for the most vulnerable in our community.
Yeah. And one of the big reasons for that is the fact that in our experience, there's no credit checks done, or very little credit checks done.
And I am going to talk a little bit more. That's probably my biggest area of interest. I have a real interest in credit reporting. I know that sounds quite boring, but it is. And I am going to speak a little bit more about that, about when buy now, pay later companies do credit checks, and why they don't, and why we don't want them to actually be able, on the whole, to access
people's credit reports.
Yeah.
All right. So that's a basic understanding of the product. The other places you see it regularly advertising, you walk down to your local shopping centre, hairdressers offer it, dentists offer it, all your basic shops in the shopping centre offer it. So you've just got to, it's very prevalent in today's society, which is why it's an important issue to discuss.
Can we, before we go on, Paul?
Yeah.
There is one thing on there. It says only charges account fees or late fees. What is the problem with that? Like, are they low?
Well, part of the issue I have with it is, I would say the late fee is quite high.
Yeah, substantial.
Compared to the value of the service, the amount of money you essentially borrowed from the buy now, pay later firm.
Yes, and that's where a lot of the clients or the people that we see are being really caught out, because something that might have seemed quite cheap, if they can't make payments, then they really get stung for those late fees.
Particularly if the proper checks are not being done in the first place, and it was clear that they weren't going to be able to make the repayments.
Absolutely. So it's a real concern.
Very true. All right. So let's move to the next slide. So me being me, I had a bit of a play on the internet and found lots of facts and figures about buy now, pay later and the effect it's having on society. And that slide gives you a bit of a grab bag about why people are using this service and what effect it's having on them. And for me, probably the two things I'm most concerned about is the majority of consumers believe it's easy to use and less risky.
Yes, that was really concerning for me too. And the fact that they found themselves in financial strife later.
Yep.
Because most of them would have gone in thinking that they could afford it. But even worse, Paul, I couldn't believe that what if people try and hide their purchases?
Yeah.
You know?
And that probably says something really concerning about financial well-being more generally in society, in addition to buy now, pay later products, because that's a sign that maybe these products are a bit more risky than people think they are.
Yeah.
Because if you're trying to hide them, arguably you're not very proud of using the product.
Yeah, exactly. Well, and I wonder how they can hide them, because ultimately they would come off their credit card statements. So
true. I guess the thing there is we get into other issues that aren't the subject of today. It's around family and domestic violence and elder abuse and horrible issues like that. And if you have clients in that sort of position, please ensure they get legal advice from the appropriate services. Legal Aid does the family and domestic violence. There are seniors legal services out there regarding elder abuse. When in doubt, help your client get the appropriate legal advice on those issues. Really important.
Absolutely. Whenever I've spoken to client groups directly, the one message that I have is so important to get legal advice early, because you can avoid a lot of the problems that might come about. And it's much easier to sell that message than to try and sell them about what might be the consequences of buying these products. Just really always say, there's free legal advice available.
The other thing that I'm concerned about on this list is 60% of buy now, pay later users have purchased things they would not normally purchase.
Yeah. And how many of those may never use those
goods?
Those goods, like the ab trainers people used to have hidden under their beds because they bought them on a whim and they never used them.
And no one's followed through. But I guess the other issue is it leads to financial overcommitment.
Yeah, absolutely.
And the consequence of that is, what other debts are they not paying as a result of taking this on?
And the other debts that they're not paying, which might be for essential items like housing, electricity, and those sorts of things. So, if they're prioritising these payments, particularly if there's, very hard-nosed collection practices, then, those other things will fall by the wayside and we see much bigger problems.
And we've even seen people essentially seeking hardship on these other products, like on their credit cards or their car loan, in order to keep paying the buy now, pay later, because they know that if they don't make this payment, the buy now, pay later will be shut off, and they can't use it until they put the payments up. And so these products advertise themselves as having really low default rates. And I think that's a bit misleading, because part of the reason they have a really low default rate is people are essentially cost shifting the burden of these products onto products that are regulated by the credit law. And products you can have a legal right to ask for financial hardship on.
Absolutely. It's a real, I think it's a real worry, you know, and I mean, hopefully there's some solutions. Is there any solutions, Paul?
Well, that's probably a good spot. That's a very good segue, Loretta. Let's now have a chat about what regulation there is. And one of the things most financial counsellors and community workers know about is the National Credit Law.
Yes.
Which is the National Consumer Credit Protection Act and the National Credit Code.
Yes. Yeah.
And we've got a problem in trying to get buy now, pay later under this law, don't we?
Yes, because to be regulated by the National Credit Code, you have to charge interest, and these products do not charge any interest, and therefore they're not regulated by that legislation.
And I guess the problem there is most consumers I've talked to essentially equate these products to being similar to a credit card or similar to a loan.
Absolutely, and I think financial counsellors and the community sector has done a really good job in raising the awareness of the rights that you have under this legislation. So people naturally assume that they're going to have similar rights when entering into these contracts, and they don't know that they don't.
And that's a problem, because they then try and exercise them and are really disappointed when they're told legally you can't do that.
No, exactly. And your rights, you may have some rights, but to exercise those rights are quite difficult, time consuming, and can be costly.
Absolutely. And I guess, some of those rights we're talking about are responsible lending obligations.
Yes, so they don't have to, and what we mean by responsible lending is obviously at a basic level, can you afford this loan? And does it meet what you're looking for in terms of the product that's been provided to you?
And I guess in that, just to confirm that, somebody made a really good point in the questions around this idea that some people are using this product essentially to make ends meet, because their credit report is probably in trouble. That means they can't access the usual credit services. And they're seeing this as their only way to get through the next fortnight.
Well, especially if they're now providing some of these services at the checkout in the grocery stores. So of course they would be using those to make ends meet, and that's not a good long-term solution for those clients.
Absolutely not.
We went from payday lending, and there's been a lot of work done to make those products regulated and to ensure people can afford those products. And now we just see another product coming onto the market that has similar consequences for consumers.
And we'll explore later on what we say should happen in terms of regulation, because we think that's really important. The other thing we're talking about is people nearly always in this space are wanting financial hardship.
Yes, absolutely. When they come and see us,
And I'm sure that's the same for all the financial counsellors out there and community workers. And they simply don't have that legal right with these products.
Exactly. And I think there's an expectation now, and that's one of the things that we've both seen in our work. Across the board, people think that they should get financial hardship for all sorts of things when they can't afford to pay. This is one area, again, where there isn't access to financial hardship and no requirement to do so.
Well, I should say there are some buy now, pay later companies who have, of their own fruition, are starting to have a financial hardship process, but it doesn't have a basis in law. It's just something they're doing as part of running their business.
which is
which we welcome,
yeah.
but we think it should have a basis in law.
Yeah.
And the reason we think it should have a basis in law is if somebody then doesn't comply with it, there's a remedy for the consumer.
Yeah.
And that's really important.
Absolutely. I'm going to, again, we'll just park the credit check stuff. Now, Paul, are there any questions yet? Because even though I've got my glasses on, I can't see that far.
So
I should be answering.
Funnily enough, there's another one about credit reports. So people are very, very keen to hear that. So we'll get to that shortly. And there's another good one here around the fact that some clients have multiple accounts with different buy now, pay later companies.
And there's no obligation. Well, again, it wouldn't matter even if they knew about the other buy now, pay later products that these people have, because there is no obligation to engage in responsible lending to ensure that the people can pay for those. So they could have 50 of these products and that wouldn't give you any rights in law.
And the risk, as the question rightfully points out, is invariably that means they won't be able to afford all these multiple accounts. And that's going to see massive amounts of late fees and admin fees as those accounts aren't paid. And that's a really good point you've made. All right, so moving to the next one. Just the other really important thing is these companies, by virtue of not being regulated, they don't have to be a member of AFCA, the Australian Financial Complaints Authority. There are a number who have joined, but they're voluntary members.
And I suspect this is where I'm just going to jump in a little bit about credit reporting. I wonder whether they've joined because they can't get access, which to many people may not know, but they cannot get access to the credit reporting system without being a member of an external dispute resolution scheme. So one of the ways in which they can get access to credit reporting is to become a member. So the first thing, if you're talking about credit reports, check whether the company is a member of AFCA, and if that company is threatening a person with a credit default listing and they're not a member of AFCA, then the question would be on what
basis are you making a listing?
Yes, because you need to be a member of the AFCA or an external dispute resolution body.
I suspect also one of the other reasons they're probably joining is with a view to it's something they can tell people about as a point of differentiation with other companies in the industry.
Certainly, and I think it's and I think to some extent too, it's seen as a way in which they can say to regulators as well, we are good players, and that further regulation may not be required.
But the difference is, if you're regulated by the credit law, you have to be a member, don't you?
Absolutely, and if you get a bad decision, you may not stay a member for very long.
That's right. So if you're under the credit law and you are no longer a member, you don't have a license anymore.
Yeah.
Whereas with these companies, if you leave, there's really no consequence.
None at all.
The other thing worth saying is there has been an inquiry of the Senate that looked at these issues. In early 2019, they recommended a greater regulatory framework for these companies. So far, none of those recommendations, unfortunately, have been acted on. So it's something out there that the more evidence collectively we have about the harm these products cause, the more hope collectively we have of being able to convince government and convince the parliament that further regulation is needed. So even if you get a client who's in great difficulty with these problems, even if you spend 5 minutes just recording the details so that when either, say, the Financial Counselling Association or somebody like that or us are looking for case studies, you don't have to go back searching through your files because you've already done the work. And the difference of case studies and the impact they can have on people who are making decisions about law is really big, isn't it?
Oh, absolutely, because I think, if you can relate something that speaks to their own personal circumstances, that has a real impact on policymakers. And they see this, they go, oh, this is such and such who's in my area, or I would fit into that mould. Then they think, well, this does have an impact on everyday Australians.
Yeah. So we don't have the regulation at the moment we like,
No.
but we have scope for continuing to show government that regulating this industry is important.
Absolutely, yeah. And I think I would stress, like Paul, it's so important to have those case studies ready to go.
Yep. All right. So I guess our problem is credit law doesn't apply. If you're helping a client who's got a problem with this sort of product, what can we do?
Not a lot.
Not a lot. Well, it's harder.
It's a lot harder.
I think this is the thing. I think there is some law out there that's helpful to us. But what we need to look at is what can we use now while we're trying to argue for that further legislation. And the sorts of things we're talking about is, are there any unfair contract terms in the product? And occasionally you will see with contracts, there might be a term that provides no benefit at all to the consumer, is solely written for the company, and is not something that's vital to the company in order to protect their rights. And if you see terms like that, you should call companies on it.
Or you definitely should get
advice about it. Absolutely.
Because it could very well be an unfair contract term. And there could be some other stuff around contract law as to the way that the contract was formed, or misleading or deceptive conduct. But the problem isn't the biggest problem, Paul. You might have those rights, but how can you enforce them?
And this is the difficulty, isn't it?
Yeah.
You would, in theory, end up having to go to the state tribunal.
And this is where, I mean, in Queensland, you could go to the state tribunal. It may be a different system in each of the different states. So you definitely want to get
the legal advice about that, wouldn't you?
But I think and even if you go through a tribunal system and you have access to a tribunal system in the state or territory that you're in, which is a relatively cheap option, it's still quite daunting for consumers to go through that process. It's not an easy process to go through.
Yeah.
You know, it's not quite the same as going to the ombudsman where you just really need to put the facts and this is what you want. It's you know, it is a lot more difficult, and I wonder how many people can actually do it.
Yeah, and this is, I guess, the difference between what practical rights people have,
Yeah.
what legal rights people have, and practically can they actually?
Yes. So you might have all those things being applicable to the particular contract. It might be misleading or deceptive conduct. There might be unfair contract terms, but there isn't any access to assistance to go and take those complaints through the tribunal, and the clients just are incapable of doing that.
Having said that, if they're a member of AFCA, you would lose nothing if you've got a complaint with them by at least lodging the complaint.
Yes. So I am talking about the ones where you wouldn't have access to AFCA because they're not a member of them. You're absolutely right. So you can still go to AFCA, of course, if you had all these and they were a member. Sorry, hopefully we haven't confused anyone that way.
No, that's all right. Now, so I think we've covered a lot of these already, but the one I'd highlight is that they cost shift and that hardship is much easier to get. What I want to spend a bit of time on is talking about credit reports.
Yeah. So I might just go back. Well, just mortgage brokers are suggesting having.
That's a good spot. Yes.
Yes. So the first thing that I wanted to talk about is, again, the first thing that you have to understand. Yes, credit reporting is available if you have the basic definition is you're allowed 7 days or more to pay for the product. All right. So that's basically that could cover anyone. Remember that used to cover the dentists and.
So what that means is the buy now, pay later's ability to list on a credit report doesn't require them to be a member of AFCA, or it does?
It does. So at the core of it, they would be able to list, all right, okay, because they extend credit for more than 7 days or more.
Yep.
Okay, so, but the credit legislation requires, if you want access to credit reporting, that's both for listing and for seeing if somebody has already a lot of other accounts, is that you must be a member of an external dispute resolution scheme so that people have access to a complaints mechanism if things go wrong.
So if they're not a member of AFCA and they threaten to list a default, what are we doing?
Well, that's an interesting one, because where do you go to complain? The only real place that you could go to is probably the Office of the Information
Commissioner.
Is it OAIC? So Office of the Australian Information Commissioner, the OAIC. But really, they're a regulator, so they don't really deal well with individual complaints. So it is quite difficult to find somewhere where you can take your complaint to. It might also, though, breach the debt collection guidelines because you're threatening something that you're unable to do. So it depends on whether you would be making that complaint to the ACCC or ASIC in that particular case. But again, both those government departments are regulators, and so their focus is not on dealing with individual complaints. It's about how to regulate the whole industry. And so sometimes we think it's a great idea for financial counsellors to make complaints to regulators, but they have to understand that it will not, they can't guarantee an outcome for the consumer.
What if they're not a member of AFCA and the default listing's already been made?
Well, I would, in that particular case, go straight to the credit reporting agency.
Good, that's what I thought.
And make a complaint and say, well, they're not a member of external dispute resolution. They shouldn't have been able to list. Why have they? I suspect that this is going to become less and less of a problem. They're not getting much better. I did want to talk about two things. So if they are a member of AFCA, there is a difference between what they can list even then, because there's two different systems. There's a comprehensive credit reporting system and there's the default listing. And in the comprehensive credit reporting system, it requires you have things like the accounts that a person has, whether they're open, they're closed, the amount of credit, and there's also something called repayment history information, which shows whether payments are late, even more than 14 days. But you don't get access to repayment history information as a lender unless you're providing regulated credit or credit where there's a responsible lending component.
So at the moment,
they will not be able to get access. These people will not be able to get access to repayment history information. There's also another issue, though, is that at the moment, even if they are members, they're not required to actually report on saying that an account's been opened, because at the moment, any mandatory credit reporting does not apply to anyone else but the banks.
The banks.
So, and I'm not, so mandatory credit reporting is only going to apply to banks at the moment, and then it might go to the others. But even in that case, it will, so they don't need to report. So you could have 20 people that might have access to credit reporting because they're a member of AFCA, but they don't actually have to tell the credit reporting agency that the person has bought a product with them. So anyone else giving them a product or lending them money won't know
about it. Okay, so to summarise, if I'm understanding.
Yeah, good, because I am glad you understand, because
just bear with me, I haven't proved I understand anything yet. So what you're saying is effectively what they can do is affect a credit report by listing a default.
Yes.
In order to do that, they have to be a member of AFCA before they can do it.
Yeah.
If they're not a member of AFCA and they're threatening a default, we're going to what I call the Privacy Commissioner, because I can't say the long name, or the ACCC. If they list a default when they weren't allowed to, they should complain directly to the credit reporting agency.
Yeah, and I mean, that at least would give you some rights to go off to the Ombudsman
Okay.
because the credit reporting agency is a member of the Ombudsman scheme. So if the credit reporting agency decided not to take the default on, you can access then the Ombudsman and say, well, it's the credit reporting, you're making the complaint about the credit reporting agency, not about the lender.
Okay. All right.
I hope that makes a bit of sense. I think that there's quite an appetite for learning more about credit reporting, I'm sure.
Just judging by the questions we're getting through. So if that's something you might want, say, a webinar on, at the end of this webinar, there's a survey, and please let us know if that's something you'd be interested in hearing from us about. All right. We've said what we've got for this area and how it's currently regulated. What do we actually want? What do we think would allow consumers to interact with this product and protect them? And I think we're saying three things. One is consumers think these are like credit products that are regulated by the national credit law. In our view, like products should be treated and regulated in the same way, and that is these products should be under the national credit law.
Oh, yeah, absolutely. And I mean, at the very least, you want those things that are in the national credit law,
Such as responsible lending,
such as financial hardship, unjust contracts, those sorts of things. So that there's because we don't want these products to be in the market unregulated.
And as a consequence of that, they would have to be a member of AFCA. That it's such that if they decided to leave AFCA, they would lose their ability to offer this product.
Yeah.
And we think that's fair. The other thing we think is really important that the insurance industry has, the banking industry has, the life insurance industry has, is an enforceable industry code.
Yes, absolutely. And that industry code really, ASIC has developed a really good statement as to what should be in an industry code. And we really think that they ought to have a similar code that meets those requirements, because otherwise those codes are toothless tigers. We've seen some funny ones over the years, haven't we, Paul?
Yeah, and I guess some of the basic stuff we'd expect in code is there's a code compliance committee, monitoring committee. And what that does is checks on to make the industry to make sure they're complying with the commitments in the code.
It's pretty basic stuff, but that's probably one of the biggest sticking points.
It's often one of the biggest sticking points. One of the other things we expect is that it's enforceable. Like some codes, if they're not enforceable, what good are they?
So you might say, oh, well, we're going to do financial hardship, you never do it, and there's no consequences.
Yeah.
So what's the point of having that?
And we would say the easiest way of doing that is an industry code and the commitments in it are part of the contract. That's probably the easiest way, isn't it?
Yeah. Well, that's the way that most of the other codes operate. So,
because then there's no doubt about what applies and what doesn't. And look, we should acknowledge that there is actually currently, there's a draft in code from some of the buy now, pay later companies out there in the public for comment. I think consultation on that might close on the 11th of March. If you're interested, feel free to have a look at it. Having had a look at it, I have some concerns as to whether it meets the regulatory guide that Loretta referred to, and we'll pop that in the submission we're doing.
And so I'd encourage people to actually look at that code and think about how it does or doesn't or wouldn't meet the needs of their clients who are using these products.
Because it's got to be workable for your clients.
Yeah.
And if it's not workable, it's not worth it.
And obviously, again, you can have the most beautiful, even enforceable industry code, but if they're not a member of an ombudsman scheme like AFCA, from a practical point of view, and having worked in this area for too many years.
I'm not allowed to say because it gives away your age.
Absolutely, Paul. Don't you dare. But that's the biggest, that is a big issue, because I don't care what laws there are, what consumer rights people have. If at the end of the day, people don't have a practical avenue of enforcing those rights, they're hopeless.
Agreed.
Mm.
All right. So, what can you do for clients? What would I practically do currently? What are we thinking? We're thinking, I'd still ask for financial hardship because you lose nothing by seeing what a company would do for you.
Yeah.
You'd also, I think, direct people to more appropriate products. Just as an example, Mills loans can often be useful. I do.
Mills loans, what are they again? Well, I know what they are.
You're just, yes. For those of you who've not interacted with them, no interest loan scams. Loretta's right to pick me up. I talk in acronyms often, and it's not okay.
Did we actually say what AFCA was?
We did.
Oh, good, because I thought
Australian Financial Complaints Authority.
Yes, we did.
I listened to that part.
All right, and then I guess the other thing to remember is don't forget that you can look at the whole of the conduct of who your client's been interacting with, and to make sure that they've done what they're supposed to do with the law that applies outside of the credit law.
That's true, and you can raise that in your letters to them. I mean, whether they'll, the problem often is it's about enforcing after that. If they're a reasonable player in the market, they may be willing to look at financial hardship and also about their conduct and what happened in the circumstances. And I often think that sometimes financial counsellors or community workers are actually in stronger positions than lawyers, because we often have to say, well, this is the law and what we think legally the clients are entitled to. But I find that financial counsellors can ask for things and they often can achieve those outcomes.
So long as it's, and I'll put the disclaimer in, so long as it meets the requirements of your own financial counselling code of conduct, then
absolutely,
then you're fine.
Yeah.
All right. What we've reached then is time for questions. So I'll just have a look at some of the questions that have already come through. And if you've got questions we haven't answered about this product along the way, please feel free to start popping those through, and we'll answer as many as we can before time's up.
Look, I've got one question, and that I think was asked and that we haven't spoken about is, are these debts provable in bankruptcy?
I think the answer is yes.
They're just like
they're like any other debt.
Do you have to give the good back?
Look, I would say no, because the contract for the good, the contract is unsecured, and
it must. I've never seen a secured.
I have not seen a secured buy now pay later contract.
Yeah.
If there was a secured buy now pay later contract, the answer is probably different. You'd lose the good.
Yes.
But I'm yet to see a contract like that.
No. So in some sense, I mean, So if you have, 10, well, I don't know whether it would be advisable to file for bankruptcy just on buy now pay later, because they're likely to be
small amounts. I guess the reality is we see these products wrapped up with
other loans,
a credit card or multiple credit cards, a personal loan,
small amount of
credit loans, consumer leases are often in there as well. So it's a whole range of products, and
so definitely throw these in terms of the debts.
If somebody decides that bankruptcy is worthwhile, absolutely put them in.
So,
and I guess that feeds in nicely to this next question that's popped up, and that's this idea that often consumers don't actually see these products as the problem.
No, really?
Yeah. They don't. They actually see the other credit products as the problem and seek help about those.
That's true, yeah.
Because they're so keen on keeping this product available to them.
Whereas, I would be interested, do you know much about what they do, what the buy now pay later providers are doing in terms of enforcement? Have we seen a lot of enforcement or just decollection practices?
Look, I think from what I've heard, it varies between companies and probably varies between the amounts. Because remember, with these products, you can get loans of anywhere between $50, or if the coffee is applicable, much less than that.
Well, I hope so.
And then way over $3,000. So what enforcement mechanisms you use probably vary a bit depending on the amount and depending on the practice of the company.
Yeah, it'd be interesting to see if anyone out there has seen the buy now, pay later providers take any legal action.
Court action, yeah.
Because I haven't had anyone come to me where they've actually taken legal action. They might have threatened it, but not.
And I guess part of the problem there for them is an image problem. If they start enforcing this sort of stuff in court, it would allow people like you and me a much stronger argument to government that greater regulation is required.
Yeah, but you know, that's the thing though, our clients are so scared about those things. They're scared about
the threat's enough.
The threat of legal action and the threat of credit
reporting. Totally agree.
So using that's why I think too, if they've been threatened in that particular way, legal advice is always a good idea.
Yep.
But even before starting with doing that search as to whether they're members.
I think we've answered the credit reporting questions that have come through in our discussion, but if we haven't, please feel free to send that through again. Now, we've talked about multiple accounts. So the idea is the problem with multiple accounts and what that causes.
Yes, yeah.
And that's caused, as you rightfully identified, by the fact that there's no responsible lending requirements, and the credit providers or the other buy now pay later schemes find it hard to identify if there are other accounts. One way I would suggest they could do that, if responsible lending applied, is you'd implement something like the payday lenders have to do, and that is get 3 months worth of bank statements. Because all of these are done by direct debit. And so they'd show up on the bank account. So if we got this under the credit law, I'd actually be arguing that these should be treated pretty similar to a small amount loan.
Absolutely. Yeah. And actually, I mean, at least in that way, small amount credit providers who are providing credit should become aware that the person has buy now, pay later, because it should be in their bank account statements. So at least at the moment, lenders who are lending new credit may not find out about them on credit reports, but would if they looked at the person's spending on their bank account statements.
I think that's right. There's another good question here, Loretta, around majority of our viewers, clients are functionally illiterate or have mental health issues and probably don't, as a result, understand the contract they're signing up for.
Well, this is a problem. Really, that's a problem about enforcement, about enforcing a person's rights, and how is that person supposed? Look, as much as we'd like to have lawyers in every
regional area,
and the reality is that most of these, even when people are going to the ombudsman scheme, if they're available, they're required to do it by themselves, and that's why we think you both need an avenue of redress when things go wrong, but you need proper regulation at the start and enforcement of those regulations so that only a few people, in a sense, need the services of an ombudsman ultimately. All those people may very well have rights to say that that contract should not be enforceable against them, but who's going to take their case to the tribunal when they can't do it themselves?
And at the moment, the burden falls on community workers, financial counsellors, and the few of us that there are in Queensland.
And that's...
Collectively, we can't see everybody.
No, and we certainly can't, even if we can give a little bit of advice about it, we certainly can't help them through the whole process of that. I think it's real terrible outcomes.
So, this is another interesting one which we haven't covered, and this is the issue around your ability to get a mortgage if you've got buy now, pay later. I'm hearing from banks that if they see one, they're taking that into account as a commitment that might affect somebody's ability to pay under responsible lending.
Well, absolutely, that would. And the problem if they do use credit reporting and they make even inquiries on your credit report, do affect what and where those inquiries are coming from do affect your ability to you know, obtain loans. So it is really important to know that, you know, if you're making lots of inquiries with, say, small amount lenders, and they are on your credit report, that will be something that a lender, when you're looking for a home loan, will take into account, because they're thinking, why would these people be having to go off to these small amount lenders or this buy now, pay later schemes?
And I guess the other thing is, if you're approaching a bank asking for financial hardship, a bank could quite reasonably say to you, only giving it to you if you're also asking for financial hardship on your buy now, pay later products, etc. Because why should they bear the burden only of the fact that your client's in financial hardship?
I mean, I think in that case, I would be taking that to Africa, but it's a fair enough thinking on the behalf of other lenders, is why should we take all of the hit in terms of you know, not being able to pay your loans? Yeah, for sure.
Okay, another question that's come through is around the difference between zip money and zip pay.
Well, I don't know much about zip money.
I think the point I'd make there is, these products aren't caught by the credit law.
Yeah.
They have differing approaches and differing product offerings, but ultimately the problems with them are still the same.
Absolutely.
Another question that's come through is a good one around, is this the same as rent to own? And the answer is no.
No. Why?
And the answer is because what we're talking about with rent to own is, what you're doing is you're leasing the good, aren't you?
Exactly. So you don't own the good, whereas in this particular case, it's you own the good, you just have borrowed money to pay for it. In lease rent to own, you don't own the good at all. And in fact, some of those may not be regulated either, but that's an issue for
that's a whole other issue. Another really good point that's come through that we may not have been clear about. Somebody's pointed out that you can't use a nils loan to pay for debt, and that's right.
Yeah.
But what we're saying is, we all have a role in preemptively helping clients to go to other products before they get themselves in trouble with these products.
Yeah, or, you know, as a way of you know, giving them a little bit of education when they're in getting a resolution of this particular product, saying if you need help in the future or need to buy these sorts of things, there are alternatives that you can access. Yeah, I think that's a good point, that nils or those sorts of schemes are not generally available to pay debt.
There's another really good question here about, what sort of verification of identity do these companies do online? That's a really good question. I'm not sure I know the answer to that.
Well, we don't. But I don't think there is any requirement, in a sense, to get, there's nothing at law that requires them to verify identity. If they happen to give a loan to, say, sell a product to somebody and then it's done fraudulently, well, that is an issue about whether they can recover against the person who they say that they've given the loan to. But there's nothing at law that requires them to get 100 points of ID before they provide that lending to them, because it's unregulated.
Yeah. And now there's a question, we mentioned unjust contracts before, and there's a question around, does that apply to buy now, pay later? And we're saying no.
Well,
but
this is where, when you're in a different state, so in some other states there's specific legislation that's not credit legislation, that's unjust contracts legislation. So this is again where you would really need to get legal advice in the state that you're in. But generally in Queensland, if you don't have access to the national credit code, you only have the Australian Consumer Law, which does have some sort of misleading and deceptive conduct, unconscionable conduct, those sorts of provisions. But again, it all comes down to enforcement again. And that law in relation to those things is very narrow. So you have to fit into very narrow criteria before you could say a loan is unconscionable under the general law.
There's a question come through, and I have to say this question doesn't surprise me, saying that a small amount lender doesn't see a buy now, pay later contract as a liability they should take into account. I'm not shocked by that. Are you, Loretta?
No, not at all. But I wonder if that person actually had the small amount lender say that to them.
because if you've got
any writing,
please share. Because to be honest, that fits with our experience of SAC lenders, small amount credit contract lenders, who generally speaking do a terrible job of assessing people's income and expenses.
And always think that you can live on nothing really and never have any entertainment in your life.
Absolutely. Now, another good question, buy now, pay later. If you're under 18, can you get it?
Okay, so this is very much a question that's state-based as well. So whether a contract is enforceable against a minor is something that's different in every state. Generally in Queensland, only contracts for necessities are binding on a minor. So generally we'd say that a cup of coffee is not a necessity.
Just as an example, but it's worth getting advice.
It's absolutely worth getting advice, but that's very state-based advice.
And I am aware that some companies actually have in their terms and conditions that you can only get the product if you're over 18.
Yeah, but I mean, if the person gets the product and they're under 18,
then that's a different discussion.
Yes, and it's irrelevant whether I would get advice, but just because somebody has said that they're over 18 and they're in fact under 18 is not necessarily a bar for them. I'm challenging that, but again, you've got the issue if they're not a member of AFCA, they need to enforce that in courts themselves, court or tribunal.
And there was a question about a particular company here being a member of AFCA. What I would recommend you do, AFCA's website is www.afca.org.au, and they actually have a search function on there that allows you to search the members. So type in the name. If they're there, great. If they're not, you've got to take the other options we were talking about.
And in fact, I always use the search engine in the AFCA website because they put you onto the right person in the company. So, which will be their particular complaint section. So it's, even if you know they're a member of AFCA, I always find the contact details for the company using that search. It's excellent.
And our experience, and we're getting comments to the same, is it's actually really easy to sign up to these products. Really easy.
Absolutely. Well, if you're going into the supermarket and they're asking you, do you want to pay by Afterpay, it must just
they don't want you hanging around for 10 minutes filling out forms.
No. So I mean, I haven't applied for any yet. I don't think
that's a relief for it.
Not yet. I might leave that dinner out one day, but I can't pay for it.
But I guess the other thing to cover, and I know we're getting to the end of the webinar. We're happy to stay around for longer if people still have questions we haven't answered, so I'll just put that out there. One of the other good questions is around these companies' ability to ban. So what usually happens when you don't pay one of these companies is they ban you. And so what that means is they prevent you from being able to access the product until you catch up. And in theory, they can do that pretty much forever, can't they?
Well, I would have. Gee, that's interesting. I suppose they can.
While you're behind. They can say
we're not going to the shop and buy your products there directly.
Let's not give people ideas here. Let's not give people ideas.
That's you know, it'd be interesting to see how that plays out over the next few years as to whether they can keep doing that for a period of time, because you know there are laws about limitations of actions and those sorts of things, and whether access to credit is a right that you should, which has been a subject of much discussion over the years, because you know there is a view that having access to credit is something that's useful at certain periods of time, and people just shouldn't be excluded just because they're in the lower socioeconomic.
And the difficulty is doing that in such a way that's affordable
and responsible.
isn't it?
Mhm.
So this is an interesting question. Someone is saying to us, okay, there are problems with this product, but isn't it reducing people's reliance on credit cards? And in theory, that's right. But our problem is they should be regulated in the same way as credit cards, because
Absolutely.
they potentially have the same bad impacts
Mm.
as not paying your credit card, and so they should be regulated in the same way.
And I think too that I'd be interested to see in the in what I would call, you know, people who are in lower income brackets, their access actually to credit cards has declined over time. And I don't know if necessarily they're just, you know, they're getting credit through credit cards anyway. So I just think we should be making sure that people have affordable credit.
Yeah.
And there's so many programs now that are available that we really ought to be directing people to those products. Yeah.
All right. 2 final questions before we might call a halt. One is around education. My understanding is there is nothing included in the financial literacy program specifically about buy now pay later schemes.
No, well, I don't know, but my view about education is you really want to get to people when they're actually thinking about doing.
Totally agree.
And, you know, whether you want to have, and also, I think the other thing is that you really want to make sure that the community workers are educated, so that when people are coming, say, for budgeting advice or are wanting, you know, help about how to deal with their finances, that's, I think, a really good opportunity to talk to them on a one-on-one basis about the sort of strategies that they might have in improving their financial well-being.
All right, and the final issue is around these companies writing debt off. I'm not aware of a client yet where a debt collector has bought a buy now pay later debt and is trying to recover on it. If that happens, get that client legal advice ASAP. Would be my advice.
Yeah, but of course, I always say I absolutely agree with Paul. The biggest thing is, you know, clients get the legal advice. At least then they know their options, even if their options are really poor. But at least they can go on the basis, well, I know what the worst is that can happen, and I've made a decision about either paying it or not paying it.
And just one final question that's come through as we've been talking. There's no data that I'm aware of around a reduction in payday lending as a result of buy now pay later. My suspicion is it's unlikely.
Yes, I don't see that necessarily would be a reduction, particularly when people are getting these products that seem to be on a whim, where they're not really wanting to buy or wouldn't have normally bought it, or, you know, have seen it and they've gone, well, you don't have to pay for it now, so you can get it now. Whereas, I think the reasons for going to a small amount lender might be different.
All right, I'll hand you back to Ellen to finish it off. Thank you, everybody out there, for
thank you for such wonderful questions, and thank you guys for such an engaging conversational webinar. I think I learned a lot, and I hope you guys all did too. Just to finish up, we've just got a couple of extra slides with our contact details if you need to contact us at Legal Aid. Office locations, we've got 13 offices throughout the state. And if you're interested in more webinars from us, please let me know, or you can register for our next webinars through our website. We haven't yet put up details about the next ones, but if you give me an email at webinars@legalaid.qld.gov.au, I can put your name on our subscription list, so you will get an email when our next webinar is becoming available. We also have free publications which you might find useful for your clients. They're on our website, and you can download them and print them out yourself, or you can order them and we pay the cost of the printing and you get them sent straight to your office. We've got some great publications that Paul's written as well about consumer law.
And Loretta as well.
And Loretta's written some too. Fantastic. That's more information about our website. So after now this webinar's over, I will get straight on to putting this webinar up on our YouTube channel, and we also add captions so to increase accessibility for anyone with disabilities. And please follow us on social media. We do a lot on social media now, and you'll find any updates about our webinar program and other community legal education activities we're doing. We always post it on our Facebook pages. We also have LinkedIn, Instagram, Twitter. So thanks everyone. We'll see you at the next webinar. Oh, and please fill out our survey at the end to let us know how we did. Thank you.